Welcome everyone to Banana Bread Trades. My name is Goose and it is Futures Contract Rollover Week. The contract is coming to an end. We're rolling over, starting a new one. The futures contracts are being delivered and now everything is about to get really fucked for a whole week. In this video, I'm going to talk about 3 key things to help you survive this week and the most important thing you should do going forward on this new contract to help yourself from getting absolutely liquidated for the first month. So let's get right into it. All right, so first things first, let's talk about what is futures contract rollover. Well, if you know what futures are, they're a type of contract to buy or sell a specific commodity, security, or asset at a future date for a specific price. Rollover week just means that that future date is upon us. And now people are going to be moving from the current contract to the next contract because as traders, most of us don't actually want the contract to be delivered to us. We just want to trade the difference in price. Whereas a lot of institutions, they do want it delivered to them. So they're going to hang around to the very last expiration day, market close, and have those contracts delivered to them. So this creates rollover week where we have this massive split in volume and volatility because traders are moving to the next contract while the old contract is still being relatively heavily traded. So it just creates really, really weird market conditions. It is also very important to note that not all futures contracts have the same expiration date. As you can see here, we have the E-mini S&P 500 futures calendar up, and we expire on March 15th of 2024, which is this week. However, if you go to crude oil futures, you will see that they do not expire until March 20th of 2024, being a whole week apart. Every contract has its own expiration dates, so you will just want to be sure to know when your rollover week is going to be so you can be prepared physically, mentally, and emotionally for the damage that's about to ensue on that week. So let's go ahead and get into those few tips that I have for you to avoid getting absolutely liquidated during rollover week and the first few weeks to follow. As you can see on my charts, on the left chart, we have the March contract for the E-mini S&P 500 futures with previous month volume on the left and current month volume on the right. And then on the right chart, we have the June contract for the E-mini S&P 500 futures as well, with previous month volume on the left and current month volume on the right. So you can see that there is a massive difference in volume, which brings us to tip number 1. During rollover week, be very wary of really low volume because people are going to be still staying on the old contract while a lot of people are moving to the new contract. So the new contract this week is going to be getting an increase in volume and volatility, whereas the old contract is going to be getting decreased volume, but also increased volatility as it comes closer to its delivery date. So you just have to be very careful because since these are still following the S&P 500, things can just get really, really weird. So just be very careful this week. Trade small or don't trade at all and let this rollover happen without you. Because trust me, it is going to happen with or without you. And it will be here the following week and be a lot nicer. Now let's move on to tip number 2. And this is also pretty similar to tip number 1, but a little different in if you use options data like I do to trade futures contracts or gauge, just market sentiment in general, be very wary that the options chain on futures contract rollover week is also going to be very weird. You may have very clear bullish signs and will just have random turbo sell wicks. Same thing with the buy side. It can be extremely bearish and we'll get turbo buys. Market will go turbo whatever it wants to on this week because these big players are trying to get their contracts filled. So yeah, just be wary of the options chain this week as well. It's going to be all sorts of a mess. And now the most important tip I can give you, tip number 3, the most important thing you can do on rollover week ever is delete everything from the previous contract. Now, I know some platforms or data providers will give you a continuous contract, and that's great for looking at daily values of, whatever options you're trading or whatever futures contracts you're trading, for getting a general idea of like where we've been before, what the trend is, market sentiment, all that jazz. That's great. But when you're looking at daily volume, supply and demand levels, you need to delete everything from that prior contract, and I'm going to show you why right now. So as you can see, both of these contracts have been trading the last few weeks, right? As they do. But I'm going to show you something really in particular. Look what price we're trading at right now on the March contract. 51.24 right now at this moment. Now, what price are we trading now at this moment on the June contract? 51.87. A whole like 60 points higher, right? We're trading at a whole 60 points higher. So the price action has been almost exactly identical, right? So this consolidation zone that we have here a few days ago at 51.42, that consolidation zone happened at 52.03 on this contract. So why would the June contract respect the consolidation zone of the March contract? Well, here's the tip. It's not going to. It's not going to respect that zone. It's not going to respect that level. And that's what gets people so messed up on contract rollover week, is they're looking at these supply and demand levels from, it's an auction process, right? We look at volume profile. We look at where all this action is taking place. Well, these action is taking place in completely different places between the two contracts. So if you have a continuous contract, I'd really recommend moving to just whatever the current contract is, deleting all your old levels, all your old everything, and only mark supply and demand levels on your current contract. And that will save you so much, because like I said, why would the June contract respect the March contract's level? And they won't. So that's the most important thing I can say, because this range here, look at this. This bottom of range that I have marked right here at, 50.58, that is at 51.24 on this one. They're so incredibly different in price that, like I said, those supply and demand levels are at completely different prices. So don't, for the love of God, don't try to trade the new contract on the old contract's levels. Just delete them. Trust me, watch it. Do your own research, of course, but also don't go risking a whole bunch of money on an old level. I've done it. I've lost lots of money from it. So yeah, like I said, trade the current thing. That's really all I have. I hope you guys have a fantastic rollover season, and I hope that you're still around to trade the following week. So thank you very much for watching, and we'll see you guys in the next one.